Got some financial issues that are bugging you? Well, on this week's episode, we're going to be talking about some email questions from listeners just like yourself. And if you've got questions or concerns, you should definitely talk with a financial professional, because if it's happening to one person, it's probably happening to multiple just like yourself. This week here on Phil's Tax Hacks and Other Retirement Facts, some email questions from listeners around the area. Welcome into Phil's Tax Hacks and Other Retirement Facts with CPA and personal financial specialist Phil Putney. Now let's get rolling with today's show. Hey everybody, welcome into Phil's Tax Hacks and Other Retirement Facts with Phil Putney and myself here to talk investing, finance, retirement, and we're going to take some email questions. We kind of got away from this. We hadn't done it for a while, Phil, so I thought we'd bring it back.
It's been a while since we did that. So
so I know they've been piling up, not necessarily
piling
for the
up
show.
a little bit. So yeah.
I mean, I know they're not necessarily for the show. They come to you, which you get emails all the time.
We type back anyways, but yeah.
And you reach back out to people anyway. But I thought let's take some of these over that you've gotten in the last, 2 months or so, and just kind of toss these out there, because it really is like one of those situations where, these things are really relatable to many people, because it's like, hey, that's kind of similar to what I'm dealing with.
Yep.
You know what I mean?
It's easier to learn from somebody else's mistakes and questions. So.
Yeah. Or successes, either way.
Or successes, either way.
Yeah,
absolutely.
Exactly. So we'll have a little fun this week. We'll just take some email questions. So hopefully folks that wrote these in, we'll change a few things to protect the innocent, all that.
That's right.
Stuff.
That's right. Not giving away too much information.
That's right. Since it's on the interwebs. But we'll share some of this stuff with folks and get some of your thoughts. And again, a lot of times these are very general. So I know you have to give some very general answers here on the podcast. But again, that's the point of then sitting down and going through, the one-on-one conversation. Because again, all these things that we talk about all the time are universal to us all as humans and as Americans and so on and so forth, and just living our life and getting towards retirement. But it's the application to your unique situation that truly makes the information, more, I guess, palatable to your deal, right?
Right.
So that's why you want to have you can kind of start that general conversation piece. You can Google stuff and all that, but eventually you need to sit down and see, how does this affect me? Because I'm different than Phil, and Phil's different, and so on and so forth. So anyway,
I always tell clients, everyone's got the same moving parts, basically, right? You all have income, you all have assets accumulated. Taxes are going to affect you, right? So those are the three big components. But at the end of the day, how you move and manipulate those three circles, so to speak, then that ultimately changes your scenario, and everyone's scenario is a little different. So, and that's what I love about the job, because it makes everything unique. It's very similar in concept, but how you apply it is unique to every individual. Yep.
Mm-hmm. Yep. All right. Well, let's do a couple here. We got Kathleen, been retired for 2 weeks, and I'm already panicking about living on the fixed income and looking for part-time job opportunities. Is this a normal reaction for a newly retired person? So, I think it probably is, right? Many people, not everybody, but probably a lot of people feel they do struggle with that. I've been pumping this thing. Now I got to take money out of it. And I don't like seeing it go down,
Yeah. That is always the biggest struggle that clients I see face, is that transition, right? You've all your life saved, you've accumulated, you've been told and, taught, and it's kind of built into you. Put the money in, you don't take it out. You never touch it, right? Well, why are you saving? What's the whole purpose, right? I think, and that's you lose sight of that, is why. Well, the why is here. It's retirement. So yeah, it's hard. It's a mind change. Some people, it's difficult. In those, I think, are to me at least, the ones that I'm less concerned with, because okay, they get it, they understand. Let's work with you, and it's natural for you to have these feelings. I'm more concerned with those that are approaching retirement. It's like, Yahoo, I've accumulated $2 million and let's go,
Right.
Whoa, put the brakes on. You've got 20, 30 years in retirement. Let's make sure you have a plan to make sure this is going to work.
So a little caution is not bad.
Caution is not bad, but you don't be too overcautious either.
Yeah. Gotcha.
To me, Kathleen, the thing would be, what's your plan? Do you have a plan? Have you, run the math on this and figured out, here's my strategy and it works? If you have, then yeah, it's natural to have these concerns of, hey, I'm starting to spend money. It's fixed income. I get it. Should I get a part-time job? I would just be in the first year of retirement, just take things slow and easy, figure it out, right? It's a natural thing to go through. You got to figure out what this retirement looks like. part-time job. If you want something to do, frankly, most of the retirees I work with get a part-time job because there's only so much you can do at home. I got the honey-do list done. I need a little bit of outside social activity. And
It's a win-win because then
right.
you
So
get,
yeah, you pick up a little bit of extra, play
right.
money, so to
Little
speak. It's
scratch.
not quote unquote in the budget, right?
That's right.
It's part of,
Yeah.
hey, I can go out and do some more golf or whatever your
Yeah.
hobby is with this. So it's,
You gotta love a little extra scratch. Nothing wrong with that.
right,
Plus you get
that's
out of
right.
the
It
house,
gives you a
right?
little bit of flexibility. So yeah.
And
Yeah.
and
So
it
whatever
works
your
both ways. It works both ways for the spouse too, right? Because then you're like, okay, I got to get away
so
from you, and
you
they're
can't,
like,
yeah,
you got to get away from me. So
yeah, that brings up a whole nother interesting discussion. A lot of times working with spouses as they're kind of nearing this retirement, especially if one of them's already been retired, or maybe they're even a stay-at-home mom. So they've been running the house their whole life, and they're like, well, no, you are not coming in my house. What are you doing? You got to find
right,
something to do.
right, so true. Yeah, it's either that or
You're
they're
gonna
like,
be,
you know what? Now I'm leaving, and you can
no,
stay
I'm
here.
leaving. Yeah.
Yeah.
You're gonna be messing up my whole system here. So
So don't panic, Kathleen. I think it's very normal. You asked, is it a
yes,
normal reaction? Yeah, it actually really is.
it is very normal. Yep,
Yeah.
yep.
So
Just
okay.
have a plan
Yeah.
and kind of
And it
ease into it.
helps. Yeah. If
Yes.
and Kathleen, obviously if you sent this in and the team and Phil had reached back out to you, but I don't remember the particulars on this, but if you start with, for anybody else who might be in a similar situation, if you don't have a strategy or a plan, then yeah, you probably do even panic a little more and you feel like you're kind of freewheeling it versus being able to see
Absolutely.
some numbers in black and white. So, if you're not there, do that
Having a
too.
plan helps because okay, does the math say it works, right? I mean, even with a plan, things can go wrong, but at least you've run the math reasonably to say, okay, if things go as I plan, and you've got to monitor it along the way, but at least you're heading in the right direction and you've got a strategy to follow. That's the
Strategy.
key. Yep.
Strategy. That's right. All right. So we got Jacob who sent one in. And he said, I'm 67. I've reached full retirement age for Social Security, but I don't have plans to retire soon. So should I just go ahead and turn it on or wait till I'm done working? So I guess we can just kind of give him some basics here on this,
Yeah.
right, Phil? So if he's not planning on retiring soon, he's at full retirement age. Yeah, he could go ahead and turn it on because the sky's the
Right.
limit on his earning limitations, right?
Right.
But why not just go ahead and wait until he's 70 and max that dude out? Now at 70, you need to turn it on because you don't get any more money. But
There's no reason not to at that point. So yeah, I mean, at full retirement, and again, every scenario is different, right? So you've got to know your scenario specifically. But kind of my first take at it, if you're continuing to work, you don't need the extra income. Why turn it on? You're going to continue to get an 8% growth. It's going to grow with inflation as well. So you're going to get the cost of living and that extra 8%.
and if you're making,
If
if he's making like big scratch right now too, that
right.
helps change those numbers,
I was
right?
going
From
to
like
say
some of the older
if your
stuff.
earning history still is higher, your current earning is replacing some of the older history, it might grow there as well. So you've got all these factors that are leaning towards it growing. The other side of it too, because I mean, I usually the proponent to this is, well, I'm going to just take it, turn it on, and I'm going to invest the difference. I can do better with it.
Right. Oh,
Okay,
that's true. Okay.
well, the biggest downside to that, especially if you're working, is it's taxable. So if you're working, I can almost guarantee, depending on your income, but chances are you're going to hit 85% taxability of Social Security. And if you think of how taxes work, right, think of it almost like a cylinder, you're filling it up. So your wages already fill up to a certain level, whatever the tax bracket you're in. So if you pour Social Security on top of that, well, if you're already in the 22%, well, it's going to be taxed at 22. Does that push you to the next bracket at 24?
Yeah.
So you're not going to end up with 100% of the benefits. So
That's a good point.
a lot of times when you run the math on that, I have 100% of it growing with the delayed earning credit, cost of living, all these other things. And you get cost of living even if you turn it on. But if I turn it on, I lock in the growth. I'm not picking up that extra 8%. And I don't get to invest 100% of it. I only get to invest 70, 80%, whatever it is
Right.
after
Yeah.
taxes.
Yeah.
So,
No, I mean, it sounds like, again, every situation is totally different. So you want to make sure
right.
you run the thing to make sure you're making the right decision before you do it. But based on the fact, and again, we don't know what he's making and so on and so forth. But,
Right.
if he's still doing the full career or he's making, big dollars or whatever, it sounds like it's leaning that way to make more sense to just wait till you're 70. But
Right.
again, double check it, run the numbers. But great question, Jacob. Thank you so much for
Oh, and
checking.
one other quick thing on that. One thing thing
Sure.
that might
Yeah.
play into filing early is life expectancy, right? So, I mean, if
Ah,
he does
true.
have health
Yeah.
concerns,
Yeah.
and he's not married, I mean, there's a lot of things that play into it from there, just that math out. So again, it comes back to having that plan and strategy. So,
That's a good
but
point. Yeah. All right. Well, thanks, Jacob. Appreciate it, bud. Erica says, Phil, I'm a big believer in my current company's future, so the majority of my 401k is invested in that company stock. I understand I am not diversified, but I feel like this is a pretty good move because I'm so thoroughly entrenched in the company. Yeah. I mean, so did the people at Enron. I mean, I know that's like 30
that's right.
years ago,
Yeah.
but still, I mean, we talked about this, I think just a few weeks back, Phil, on something a little similar. Um, right there in the Motor City, right, with the
Oh
big
yeah.
three
It's,
automakers.
I mean, this is something I
So
deal with all the time.
so many
So,
things tied into that, like so much of your income and retirement and so on and so forth is tied to one thing. And
right.
and granted, they're probably too big to fail, but I mean, we've seen close calls before. So is it a smart move? Probably not.
I would have to say, and again, I don't, when she says the majority of, I don't know what that looks like. I mean, if it's
Right.
all of
Yeah.
it,
As
you
if
got to look
majority
at,
could be 51%.
right. You got to look at the big picture. Even that,
Yeah.
I mean, that's a big exposure
It is a
because the
big
thing to
brand. Yeah.
remember is, I mean, that's one company and one industry, but more concerning, it's one company, right? So
Yeah.
something bad happens to that specific company.
What's your
And I,
paycheck? It's your
right.
insurance, probably. It's your,
Right. Well,
retirement
and
account. I mean,
if you look at it from a retirement standpoint, so this is your 401k, that's tied to that. If you've got a pension from that company, that is even worse because now that stream of income is tied to that company. So you've got to look at the big picture. And I appreciate and understand the loyalty, and it's something that we don't see it often anymore, right? I mean, most workers today are companies 2, 3, 4, 5 years, and they're moving on to something different.
right.
And I mean, to that point, companies aren't as loyal and, technically maybe as good to their employees as they used to be with some of the things. It used to be you work for the same company 20, 30 years. And I've got a lot of clients that I've worked with in retirement that they've had one job their whole career.
Mm-hmm.
They've worked at this company. That's the first job they got out of college and they've been there their whole career. So, I understand that loyalty, just understand the risk because
Right.
there's things that you may be loyal and love the company, but there's things that are even outside that company's control,
Very
that
true.
can affect them. That how is that going to then affect your retirement? Do you want to put everything on the line for something that you don't have much control in
Yeah. I mean,
versus diversifying it a little bit? Now you don't have that exposure. So,
even if you're a VP or something, if you're not on the board, I don't know how much control you got.
well, and
Right.
even if
So,
you're on the board, I mean, so you got
yeah,
one
true.
vote, and I mean, then there's the stockholders. I mean, there's just too many things you have absolutely no control over.
Yeah,
So,
that's a good point. Yeah, for sure. I was having a little fun there. I was having one of those. I was thinking about that moment in the movie years ago, "Mommy Dearest," where Joan Crawford she was on the board of Pepsi because her husband died and left it to her, and she's
yeah,
like, I'm on the board now. I'm making changes, and of course she said some other
that's
colorful things that I can't repeat. But anyway, it was like one of those things. Like, well, yeah, you're still just one person, though.
that's right. You're one person, one
Yeah.
vote. Sorry.
Yeah. All right. Well, great question, Erica. Thank you so much. Hopefully that helps. And of course, Phil and the team's obviously reached out to you. All right. Last one here. Anthony says, I have almost $2 million in retirement savings, but a lot of debt. I own rental property that I could sell, and it would give me enough to pay off my 3 cars, all my credit cards, parent plus student loan that I'm paying for my kids, and a personal loan from the credit union. Yeah, he's right. He's got a lot of debt. But he could sell rental property and get rid of it. I've always disliked the idea of doing that, though, because I do kind of like the idea of the rental property for income. Plus, I know I got to pay some capital gains when I sell it. So just kind of, I know you can't tell me specifically, but just kind of give me some ideas on what you think about something like this. Does it make sense to sell a property if it gets rid of all your debt?
I mean, it could. You've got to look at the overall numbers in that scenario.
That's tempting, though.
That's a tough call. Yeah, it's very tempting because hey, I can clean slate all this debt that I
Yeah.
have.
And go,
The downside is, and I would get rid of this rental income. I'm assuming it's providing a positive cash flow, right? I mean, I would assume that's typically what you're looking for. So you're losing that, and you're losing potentially appreciation in the property. You have to look at what you're going to have after taxes and after closing costs because it's real estate. So, typically when we're estimating, what the costs are to sell property, you're going to lose around 10% just in closing costs between paying a realtor, transfer taxes, title insurance, all the other things that go with it. So you really have to run the math. And when you say you got credit card debt, personal, line of credit, this Parent Plus loan. So, I
3
mean, if these are
cars.
all small numbers, is there other ways to get those knocked out early versus, I mean, if that's a significant amount of debt,
Right.
yeah, then maybe it's definitely worth
Yeah,
looking at this
he didn't
scenario
give
to
us
kind
the
of wipe it
number,
out.
but
Yeah,
yeah,
I mean, if it's like,
it
oh, I
could
got
be.
2,000 in credit card and I've got a 10,000 Parent Plus loan and I got a $5,000 line of credit at the bank. Okay, well, these
Right.
are sounds like in your scenario maybe more
But
manageable
he
numbers. There's
did say
probably other ways to get
kids,
rid of it.
right? He did say kids,
Yeah,
and then 3 cars. So I mean, I don't know. It's not. It's conceivable just with the limited information we got. He could be looking at 100 grand,
it could,
or more.
yeah. And
So
like we've mentioned many times, I mean, we don't have enough information obviously here to give
yeah, and we're
specifics.
just kind of giving ideas to
So,
think about
right.
what possibly could be a way to think about to take to your
Yep.
advisor, right? Take this to your advisor and say, what should I do? Or come in and see Phil, or have more of that specific conversation. But it's kind of like, okay, if I have this, and this does give me a way out. Is the pros and the cons there worth it? Maybe not. You could always offload all this debt if you sold the place, potentially. We were just talking on our prior episode of podcast this month, Phil, where inventory's down. So he might
Right.
be able to move this thing, especially if it's not overly high priced, right? Because then it's going to be very attractive. So he could move it, get all his debt paid off. And if he still wanted to get back into rental property, he could kind of start,
Maybe do it again.
do it again.
Yeah, I mean, my concern, again, in this scenario is, okay, what got you to this point to begin with? I mean, you mentioned credit card, personal loan. Okay, yeah. So selling the rental property wipes it out. Now you got a clean slate. Well, that's great, but what are you going to do next go around, right? Unfortunately, for some people that doesn't prevent this from happening again in 5, 10 years down the road. Now we're looking at it again, and now you don't have the rental property. So to me, there's a bigger question before you even get to this. So how did you get here? And let's look at that piece of it first before you start looking at, wiping the clean slate
Okay.
and
Let's look at
wiping
the
out where you're at today.
psychology.
Because
Right.
yeah, it might feel good just to get rid of it. That's great,
Yeah.
awesome. Oftentimes though that happens. You're like, whoo, that was tough, man. Now I'm free. And
Yeah.
before you know it, you're in a similar scenario 2, 3, 5 years down the road, and it's like, okay, what happened? And now
Yeah.
you lost an asset. So
Very true. Good point.
so
Well,
have a plan, understand pros and cons of both sides of that decision before you start jumping in and making this emotional decision of, oh, it'd be great, I can sell it, wipe out all the debt, I'm good.
yeah, there you go.
So
Well, and that's why, it's fun to debate these, email questions and kind of go back and forth. Because again, it could be other people in a similar situation thinking something similar themselves, right? So at the end of the day, it comes back to what you got going on financially. Have you talked with a financial advisor, financial professional, especially, if you're, starting to approach retirement or, 40 plus or whatever, and the time horizon's getting shorter, it's worth it to have that conversation. So if you'd like to drop a line to the show, reach out to Phil, send an email, whatever you want to do. You can leave comments on the comment section there on the YouTube page. You can subscribe to us on Apple and Spotify and YouTube. You can also just reach out to Phil at philstaxhacks.com. That's philstaxhacks.com, or call him at 248-888-7530. Numbers on the screen if you're watching. And also there's details in the show notes. All right, Phil, thanks for hanging out and breaking these down, buddy. I always appreciate it. Yeah, man. Have yourself a great week. Have a good week. Yeah, we'll see you in. I think this. I don't know if this one's February. Yeah. So we're in. Yeah, we're going
to be in February. So
so we're taping it just
this one
before
is February.
Yeah, we're taping this one
before
just before February, but this one will drop in February. So we'll see what old Punxsutawney Phil winds up saying if we're going to see
right.
some
How long
spring
this
or
winter
not.
thing's going to hang out? So
it's always 6 more weeks anyway. I don't know why. I don't know why we bother. Yeah. All right, you folks have a good one. We'll see you next time right here on Phil's Tax Hacks and other retirement facts.
Phil?
Investment advisory services offered through AFS Wealth Management. The content of this program is provided for informational purposes only and is not a solicitation or recommendation of any investment strategy. Investments and/or investment strategies involve risk, including the possible loss of principal. There is no assurance that any investment strategy will achieve its objectives.